Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be mainly focused on a particular chart pattern which most people seem to have missed and what that's telling us in terms of a breakout and the likely target. And as per usual, I'm going to be running down on the various time frames, the monthly, the weekly and the daily, and also give you some insight into exactly where we are on the weekly cycles as well as the 60-day cycles. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, so I'm going to go straight into the main body of the video and look at the exact chart, which is imminent in breaking out in terms of the next coming days. And it may not seem like that at the moment, as we've had a bit of a pullback from last night into today. And the current price, as you can see on the right-hand side, is 112,400. So what is this pattern? Well, the pattern is this. It's an inverse head and shoulders pattern. Now, this is a bullish pattern, and this is at the same neckline. If you extend this to the left-hand side, you'll see there's a lot of support here, and then there was resistance, and then there's the resistance and support here. But the pattern itself is an inverse head and shoulders pattern. So what you've got at the moment now developing, we've had the left hand shoulder, we've had the head, and we're now beginning to build the right hand shoulder here. And when you look at the 60-day cycle, you'll realize that we will be heading right back up here to retest this 117, 118 level in the coming days. And if you have a look at this particular pattern on the 4-hourly chart, you'll see that this is a little bit more prominent because you've got more data here. So you've got the left shoulder quite clearly at this neckline, and then you've got this head, and then you've got this neckline here. So what is the exact target that we can expect for this particular pattern? So as I've mentioned many times, there's lots of different ways you can measure a target, and I can only share with you the one I use, and that is from the classical charting point of view. But I'm going to share two types here of targets, and if you're using a different target and it works for you, then absolutely fine. I'm really happy for you. Whichever measure you're using is working for you. But here's the two measures that I'm going to be giving you here. The first one is from the bottom of the head to the actual neckline. It gives you around about 9%, and that 9%, once we have the breakout here, you'll see that the 9% takes you to around about the 128,000. And the other way of doing it is that when you take the previous high to the low using the Fibonacci retracement tool, then on this measure, it comes virtually to the same price. So the 1.272 is at 129. So you can see quite clearly on another measure I think I've done previously on this channel, we came to 127,000. So you know that in the ballpark figure of 127, 128, 129, and always remember these targets are zones. You know that the price is going to be coming here, breaking out, and it's going to hover around a certain zone. So this zone is going to be around about the 127, 129, even 130, and then you're going to get some sort of a pullback here. But certainly, when you look at the 60-day cycles and the weekly cycles, you know that this is going to be more than likely, with a higher probability, we're going to be taking out the 124,000 in the next 60-day cycle. So while we mention exact targets like 128,000, obviously they are really zones because the price hovers around it. It doesn't exactly go to that price and then just pulls back from there. And for those people worried about this little pullback here that we've got, in the last week's video, I gave you certain targets that as we're coming towards the end of the current 60-day cycle, that we should expect some sort of a pullback down to the targets that I gave you last week. It was going to be around 111 or 110,000, which would make sense because it would bring it back down to this support level here, around 110, 111. And if it wants to do a deeper decline, then we're talking about coming back down to the $107,000, $106,000. And when we have a look at the monthly time frame, there was another final target before anybody starts getting worried. And as long as we don't break that target, then we should be still well within the realms of the bull market that we're currently in. So let's have a rundown on the various time frames, starting off from the monthly and then the weekly and the daily, and then have a look at the various cycles, the weekly and the daily, to show us exactly where we are and put everything into context and where we're heading in the short, medium and long term. Okay, so this is the monthly time frame, and I'm going to put on here the 8 EMA, very important. This is one of our key indicators for the end of the bull market. If the monthly price for Bitcoin closes below the 8 EMA as per the historical context of the first, second and the third cycle of the period of the last 15, 16 years, then we know with a higher probability that the end of the bull market has come. So if I put the 8 EMA, and I just want to explain, so what we've got here is the 8 EMA. If I turn this on, and please remember when it says 3 EMA here, these are 3 different types of EMAs. If you go into the settings, you'll see that the three EMAs are 8 EMA, the 21 and the 34, and the style, you'll see that the blue line, which is the one ticked, is the 8 EMA. So these are the three that I use, but I'm only going to show you the 8 EMA because that will be the first one that would be triggered on a monthly time frame for the end of the bull market. And as we can see quite clearly, at the moment, that blue line is at 103,000. So what we have is a continuation of the bull market. So until the candle closes below the 8 EMA, we're good to go forward to much higher levels. So the current monthly candle is showing a little bit of bearishness. Obviously, it's coming back down a little bit. And we did have this tweezer top here, which is obviously a bearish signal. However, in the time band of the 4-year cycle, we can expect some of these bearish signals to be ignored. I'm not saying that this will be ignored, but because of the context of the 60-day cycle and the weekly cycles, the most likely outcome is that even if we come back down and retest the 8 EMA, which is about 103,000 now, so then this bearish candle would have played out, and then we should be good to go in October and November and December. And one of the reasons why we're getting some sort of a pullback is that the weekly time frame is showing us a bearish setup here. The weekly close yesterday unexpectedly came back down and closed here, which was at 115,200. So what you've got is at the top of the trend, you've got a gravestone doji candle, which is obviously bearish, and that normally forms the pattern which we call the evening star. So what you normally get is a strong green Marubozu candle on the left-hand side, a small candle here. It's either usually a indecision candle or a gravestone doji candle, and then it's followed by a red candle on the other side. And this is exactly what we're getting. So for most of this week, we may well get a strong candle coming all the way down to the 110,000 or even lower. But certainly we are now in the final stages of the current 60-day cycle, from which we should be able to expect a bounce. So in the short term, we're obviously going to get some sort of a decline. But if you look at the overall picture here, what we are getting is a rising demand line. So I'm not expecting this to fall below this 106, although we do have that target of the 8 EMA around about the 103,000. But based on this particular pattern, we are getting the higher lows, and this pattern should conclude this week and at the very latest next week. So this is where we're at, but certainly this pattern is giving us a bearish signal that we're going to be having some sort of a decline, possibly down to 106 or even 110, and then we're going to get some sort of a conclusion to this current 60-day cycles. So let's have a look at firstly the weekly cycles to put everything into context, and then we'll have a look at the 60-day cycle as well. Okay, so this is the weekly time frame, and we're on the 26 weekly cycles. So we started the weekly cycle here at the Trump tariffs back in April, and this should be concluding at the end of this month in September. And as we know, whenever we come to the end of the declines, like this one here, at the end of the previous weekly cycles, which ended on week 32, we should be expecting some sort of a decline before the beginning of the new cycle. So as I've explained before, within a 26-week period, you get 3 60-day cycles, and these are the 60-day cycles. The first one being the most powerful one, and this is why we're expecting a very powerful move here once we get into the new 26 weekly cycle. And then the second one here, between the two green lines, and then this is the final 60-day cycle we're in now. So we're now waiting for some sort of a conclusion here before the explosive move, and this is what's going to catch most people out. Most people are not aware of how these cycles work, because what Bitcoin's doing is fooling everybody into thinking that we're really going to go down, and then people will sell out here, and then they'll miss out on the big move here. Okay, so now we can have a look through the lens of the 60-day cycle. This was the end of the previous cycle here on day 59. And currently, today, Monday, the 22nd of September, we are on day 50. So we're on the 50th day of the current cycle. And obviously it's going to end here. The traditional one would end on the 2nd of October, which would take it to the 60 days. And what we know with the 60-day cycles is that we have around about a 10-15 day period either side of the traditional 60-day cycle where we can expect some sort of a conclusion of the current cycle and the beginning of a new cycle. So as mentioned in the last 2 weeks' videos, we should be expecting some sort of a rundown here. We had a failed cycle, as we know, at this point. When we started the cycle, we closed below that to give us a failed cycle. And as I mentioned at the time, very unlikely that we're going to move above the 124,000 in the current cycle. And the inherent weakness of this was telling us that these are the 3 targets that we can really expect at the best: the 113, the 116 and the 118. And what we've done is we've managed to get all the way up to just shy of 118. I think the highest we came to was 117,998. So since then, what we've done is we've had a pullback now, and this is the rundown into the end of the current cycle. So everything's playing out exactly as it should do. There is nothing untoward, except if you don't understand the 60-day cycles, and if you don't understand the pullbacks into the 60-day cycle end, then you're going to get caught out by these declines to shake you out before the explosive move. As I mentioned in the weekly cycles, the first 60-day cycle of the new weekly cycle should give us a big explosive move here, and this is when I expect in the next cycle from October and November to actually take out the 124, and I've given you that target of around 128,000 to look out for. So it's very simple. We're just waiting now. It's a waiting game. Not many people are patient, so this is where some people can get caught out. And I just always want to remind people with this particular very important quote by Jesse Livermore, and that is that the money is made by sitting, not trading. And it's the sitting and the patience which a lot of people don't have. But I just want to remind people that if you can actually be patient and not have the temptation of always going in and out of the markets, and always remember, patience is not just the ability to wait, but the ability to keep a good attitude while waiting. And the main thing is always just to remain positive. So as long as we know that we don't have an 8 EMA closing on the monthly time frame, the trajectory for the current bull market is still to the upside, and we haven't come to the end of that bull market as far as the charts are showing us at the moment. So we just need to keep a good attitude so that when there is the time for those people who want to exit, and I'm sure there are many people who don't want to exit and want to carry on holding Bitcoin forever and ever, and that's absolutely fine. We all respect everybody's own individual decisions, what they want to make. But for those who want to exit and who want to get off the bull market, by keeping a good attitude, you'll probably end up making, with a higher probability, a very good decision. And talking about attitude, always remember that it's your attitude, not your aptitude, that will determine how high you go in life, i.e. your altitude. So with that context in mind, I think the main thing is to always just keep a bigger picture view and not get shaken out by small moves like this. We are in a rising trend line here. It might be breaking out of that trend line a little bit, but the chances are we're going to come across some horizontal support line here at around about 110,000, or at the very lowest around here 106,000. Okay, on the weekly time frame for the US dollar, looking at the DXY, we did have a bullish close for the dollar. So what we may well see here is a run up for the dollar. So obviously this is not good for the markets, and that seems to play in to the hands of what's happening at Bitcoin as we're having a rundown this week. So with this dragonfly doji candle here, this is usually putting a bottom in, and we may get a run up of 1 or 2 weeks up here. So this is quite a bullish pattern here for the dollar. So we may well get a little bit of a run up here. Something to look out for in the next few days, and that is tomorrow at 12:30 p.m. Eastern Time, which is 5:35 UK GMT time. The Federal Chair, Jerome Powell, is going to be making a speech. And if the last speech was anything to go by, we had a very bullish end to that day. That previous speech was quite bullish, which actually triggered the markets to the upside. And the last time Mr. Powell spoke was at the Jackson Hole, where he gave the speech on the 22nd of August. And this is what happened on that day. After he spoke, the market for Bitcoin went from 112,400, not very dissimilar to where it is now, all the way up to here at 117,000. So he does move the markets. So depending on what he really says, we know that the markets can get moved by what he's saying. And recently we had the 25 basis points cut, and we are expecting at the next meeting on the 29th of October, the target rate probability for that meeting is for another 25 basis points cut down to 3.75 to 4.0, and that probability is at 91.9%. So we now know that with a very high probability, we've got another 25 basis points cut to come in October, which sets us up nicely for the 60-day cycle takeoff that we're expecting. And also for the final meeting this year on the 10th of December, you can see that a further 25 basis points cut to 3.5 to 3.75, that probability is at 78.7. So it looks with a high probability we're going to get 2 more 25 basis points cut in October and December. And the beauty about that is that those 2 cuts have not been priced in yet. So we are waiting for that rally to price those in, and we should be starting to get that once we now turn around from the decline that we're getting here into the end of the current 60-day cycle. So expect a little bit of weakness for the rest of this week, and then hopefully either by the end of this week or at the beginning of next week, we should see some sort of a conclusion to the current 60-day cycle, and then for it to take off. And for those of you who are interested in the Bitcoin miners, what we're really seeing here is we've seen a very big explosive move for the Bitcoin miners from this point here in April. And this is really where most people sold out from the Bitcoin miners, because what they'd seen was a very poor return from the Bitcoin miners down to here. And this is entirely understandable when people see their portfolios go down. And we saw that in the private membership, our portfolios started to go down. But what we have seen is a really quite a big pickup from this point onwards. From that point in April to Friday's close, the Bitcoin miners have outperformed Bitcoin by 175%. And so being in the final stages of the bull market, we do expect a leverage play in favor of the miners. So this should really continue to much higher levels. And obviously we've got these resistance points at the tops of these candles here, but we should see some further explosive growth now from the Bitcoin miners, and they're really front running Bitcoin at the moment. And for those of you who are interested in our portfolio and where we're at with that, currently our passive portfolio, which has grown from the start at the beginning of 2023 of $100,000, that portfolio is now up to $777,000, which is the highest it's ever been so far. And our trading portfolio is now up to $603,000. We do have a target which may seem rather stretched at the moment, but what we do know with the Bitcoin miners is that they can take off at any time, and you can easily see a 5, 6, 7, 8, even 10x in only 2 or 3 months. So our target of 5 million remains on the table. It may seem a little bit stretched at the moment, but certainly we're up to $750,000 with a passive portfolio and just above the $500,000 mark for the trading portfolio. And if you're interested in following our portfolio as well as the Bitcoin miners alongside Bitcoin and want to understand what we do on the trading side of things, where we do ratio trading, then below any of my videos here you'll see that there is a new members introduction video there which covers the ratio trading in much more detail and how it works. And regarding the ratio trading, we are in one current ratio trade, but since the beginning of 2024, as you can see from here, these are our profit losses. We've done about 45 ratio trades, and so far we've done incredibly well with them. And if you want to learn a little bit about ratio trades, not just for this cycle, maybe for the future as well, or if you're a trader who wants to understand a different element of trading, then this new members introduction video will give you some insight. And if you want to join us in the private member section, then below all of my videos you'll see the join button here, but also in the description box there is a Bitcoin miners membership join link with this red button here. Then for the price of just one coffee per week at £12.99 per month, you'll have access to 2 specific videos on Bitcoin and the Bitcoin miners on a Wednesday and a Saturday, and also on a daily basis, Monday to Friday. We do these market updates, which gives you an insight into exactly what's happened on each particular day concerning Bitcoin and the Bitcoin miners, so you can follow Bitcoin and the changes that occur on a daily basis. And that information is absolutely key as we come towards the end of the current bull market. And please remember, you can cancel at any time. So if you just want to have a look at exactly what we do, even for 1 month, and see if it adds value to you in any way. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.